So I got a listener request in the last couple weeks to talk about how to read financial statements, and I'm not going to do an in-depth video because it would take up too much time. I'm not going to do it for free, and it's not going to get many views anyway. So I'm just going to do a short little video talking about some red flags in Alibaba's financial statements. But before I do that, I have to show you what a normal and healthy income statement looks like. So this is the income statement for Franco-Nevada, which is publicly traded on the New York Stock Exchange, symbol FNV, Frank Neil Vicky. And Franco-Nevada is an extremely efficient business. It has very high revenue per employee. It's a large royalty and streaming company. They have about 40 employees, and they have 106 assets online generating cash flow. So they're well diversified. Since they re-IPO'd in 2007, I believe they have 11 straight years of dividend increases. So this is a very sound company, and you will see in a second with very good margins. So the income statement is important because this is where we find out the margins of the business and how healthy the business is, and also net profit and net income and things like that. But it's important to know the margins of the business because you compare the margins to see if the business is getting worse or if the margins are being sacrificed for growth or a red flag like that. The red flags are in Alibaba. So the income statement for Franco-Nevada is very sound. It's normal and healthy. It has gross profit larger than operating income or operating margin, and its operating margin or operating income is larger than net income. So on most of the financial statements that you'll look at for income statements, this is what you will see for the business. You'll see gross profit, a larger number, then you'll see operating income, which is smaller than gross profit, and then you'll see net income, which is smaller than operating income. Now, to calculate margins, what you do is you take the total revenue here, and you take the gross profit number, and you divide the gross profit number by total revenue, and that'll give you your gross margins. And I already did that math. The gross margins for Franco-Nevada are a superb 82.193%. So absolutely outstanding. And the operating income, the way you calculate the operating margins is you take this number and you divide that by total revenue. So this number divided by that number. And that'll give you, I did that math as well, that'll give you 29%, rounding off 29%. So that's very solid. And finally, for net income, you take that number, 139,000, which is really 139 million because all numbers are in thousands, and you divide that number by total revenue. And that'll be your net profit margins. And that number will be 21.355%, which is also very, very solid. So Franco-Nevada is a solid business with very solid margins. They can generate free cash flow, and then they can use the free cash flow to either fund their growth, make investments, strategically buy back their shares, or pay increasing dividends. And that is why Franco-Nevada shares, they're at $78.13 per share, despite the gold price being in basically a bear market since 2011. So Franco-Nevada shares are up a lot. I think they're around $40. They're around $40 in like 2008. So Franco-Nevada shares have done very, very well regardless of gold price, because they have dividend increases and they just continue to grow cash flows and grow their business. And they can do it very efficiently. The royalty and streaming companies, the larger ones like Franco-Nevada, Wheaton Precious Metals, and Royal Gold, have all won awards for efficiency. So now that you've seen what a healthy and normal income statement should look like, let's go to Alibaba. So Alibaba, I believe it IPO'd either in late 2015 or 2016, and there were warnings, and there's articles I have from John Hempton, hedge fund manager John Hempton of Bronte Capital, and this was from 2015 from a Fortune article, and this one was from Jim Chanos of 2016, warning about, from Fortune as well, warning about the accounting in Alibaba, and they had issues. So let me talk about some of the issues now in Alibaba. So this is their income statement, and their income statement looks vastly different than the income statement for Franco-Nevada or for a normal company in general. So like I said, with a normal company, we should expect gross profits to consistently be larger than operating income, and operating income to be consistently larger than net income. And this is not the case with Alibaba. So Alibaba, the worst years on these income statements are from 2016, where the net income is much larger than the operating income, and also the net income is much larger than the gross profit. So that would be red flags to me. Now, maybe there's a justification for this. The other issue with Alibaba is if you go to the statement of cash flows here, also in 2016, their net income is also larger than their annual operating cash flow. So their operating cash flow was 56 billion for 2016, and their net income was larger at 71.46 billion. So that's another red flag. And you don't see this talked about a lot in the Seeking Alpha articles. The Seeking Alpha headlines are all like, Alibaba's great, Alibaba should be bought on the dip, Alibaba's a great value now. Meanwhile, the stock topped out around like $208 a share, and it's been slowly getting worse. And I think a lot of that is due to the trade war, the problems. But there's an interesting video here from Winston Serpensa on China trade war. And he talks about how a lot of these trinkets, these small trinkets that you may buy on eBay or Alibaba, that sometimes the shipping is more money than the item itself, like plastic or metal. And he wonders how the Chinese company can make a profit. Well, it apparently, according to Winston, who lived in China for 14 years, that the Chinese government subsidizes all the Chinese shipping. So it's free shipping. So that's how they make a profit. So apparently that's how Alibaba, they don't have to deal with those costs of shipping. So the people who sell on Alibaba don't have to deal with those costs. And if you buy something directly from Alibaba, then they don't have to, because I believe they do make a lot of knockoffs and generic stuff. Then they might not even have to pay for shipping. Okay, so back to the income statement for Alibaba. One of the other major things I noticed with Alibaba recently, and this is from the end of the first quarter of 2019, is now the net income is larger again than the operating income. So another red flag. So this company, Alibaba, for perspective's sake, Alibaba is supposed to have a $400 billion market cap. They claim to have $190 billion in cash, and yet with their financial statements, where I do see some red flags with not an enormous amount of research. My hedge fund contacts are telling me that despite what the articles say on Seeking Alpha, that there is a lot of red flags in Alibaba's financial statements. You have to dig very deep, though. So it's been talked about at the Grants Interest Rate Observer conferences. Jim Chanos has talked about it. The guy from Bronte Capital, who has a superb track record for shorting, has talked about some of the problems as well, but no one seems to really care about raising the red flags on Alibaba. So in the income statement, just looking for a couple minutes, we can already see some red flags. And it's also very weird how even the net income is so close, even in 2017, to operating income. So there are red flags throughout the Alibaba income statement. They would require more research and more due diligence, but this goes back to the China hustle. So just because small and medium-sized companies in China were screwing over American investors, why wouldn't a larger Chinese company try to do it too? Seems to be the normal type of modus operandi for a lot of Chinese companies. An American company couldn't get away with a lot of the same issues here. Eventually, there would be a lot more scrutiny. Although I think nowadays a lot of companies get away with very aggressive accounting. If you want to do more due diligence on this, take a look. But it looks like some of the more egregious red flags are from 2016, but there are other ones in the other years as well. Especially in 2016 with the net income being larger than the gross profit and the net income being larger than the operating cash flow in 2016. There's a couple other articles I will put links to below the video, like for winning investing, how to spot accounting red flags the easy way, talking about net income and operating cash flow and comparing things. And then also the investment banking accounting quick lesson, how to look through some red flags and going through some problems with Avon, how Avon had much higher net income than operating cash flow for a while. And then this last article here, look for the red flags in the income statement. So the income statement, the net profit, the net income gets moved over into the statement of cash flows and the operating cash flow. So the operating cash flow is much harder to fake, but it's red flags if you see continuously higher net income than operating cash flow for companies. Okay, so I think I've highlighted some of the potential red flags with Alibaba. It is very weird, though, going back to here, that you're seeing really strong net income and the other margins look pretty weak. And they're all over the place, too. These margins are all over the place. Because look, in 2018, the margins were larger. The operating income margins were larger on way less revenue. So the revenue was a lot larger in 2019, and you have the operating income for 2019 less. If they are growing, they're growing very inefficiently. So they grew revenue from 2018 to 2019, but then the operating income dropped. So they either did it inefficiently or there's a red flag there with their accounting. Maybe a combination of the two. This is definitely worthy of more research and due diligence if you want to take a look there, but it would require a lot of digging. Because apparently the mainstream financial media doesn't really care. And they were, I guess, paid years ago to pump the stock. There's been allegations that like Yahoo Finance and CNBC and others for the Alibaba IPO took an enormous amount of marketing money to pump that stock when it IPO'd. Okay, well, that's it for now. Hopefully you like this little short video going through the income statement and some of the red flags. So Franco-Nevada has a very healthy income statement, and I don't see any red flags on Franco-Nevada's income statement. It looks normal and healthy to me, and they have a very efficient business model. It's not very hard what they do. They only have 40 employees, and I see a lot of curiosities and potential red flags here in the income statement and also with the statement of cash flows with Alibaba. Please like this video. Share it with friends and family, and don't forget to subscribe to the Wall Street for Main Street YouTube channel if you have not already done so. Thanks for helping Wall Street for Main Street pass the 20,000 YouTube channel subscriber milestone despite YouTube censorship. Hopefully, we'll be able to get to 30,000 or even 40,000 YouTube channel subscribers quickly if YouTube doesn't shut down this channel. If YouTube does shut down this channel, remember to also sign up for the Wall Street for Main Street email list that's on the wallstreetformainstreet.com website and will tell you where the videos are going to be uploaded instead of YouTube. Also, if you really like the content and you decide that you want to give a one-time donation, you can go to wallstreetformainstreet.com, that's wallstreetformainst.com website, where there's different options for you to do so. Or you can become a Patreon contributor. Thanks for listening, and I look forward to providing my loyal listeners with some of the best information, analysis, and financial education available out there, free or paid, as I work to grow the podcast and also get my educational technology company funded.